Okay, recording started. Good afternoon and good evening, everybody. My name is Pete Marsh. I'm one of the steering committee members for the Citizens Climate Lobby Electrification Action Team, and we're delighted to have everybody here tonight. This is the third in a three-webinar series about green financing and green banks. And for many of us in CCL, we're somewhat new to this. And in each of our webinars, we've invited in some people who have expertise, and we've learned a little bit about how green banks work in general. Tonight, I'm really excited. We have the opportunity to hear uh, in the midst of all the headwinds for the Inflation Reduction Act broadly and the green banks and the National Climate Infrastructure Fund in particular, we have some good news. We have some folks here from not one of, but the largest federal green bank that was created by the Inflation Reduction Act and Community Partners Capital Climate Fund, and that's Lindsay Robbins, I'm sorry, say hello. And then from S2 Strategies, Franz Hochstrasser. And S2 Strategies has this really interesting position as the secretariat of a national organization named Green Banks 50, which is promoting and organizing green banks. And Franz can tell us a little bit about what's happening nationally. And the thing that excites me the most is despite all of the headwinds from the federal funding perspective, and as Franz told a few of us in an email earlier today, the reconciliation bill text today that was just released is not good news for this program nor others. And yet, the green banks themselves they spent a couple of years putting together proposals and working together and collaborating to build up capability to submit their proposals for green banks. And they've continued since the awards were made last late summer. And uh, they're not going to let all that effort go to waste. And so Lindsay and Franz are going to tell us a little bit about how the green banks are planning to operate despite a challenging climate, pun intended. So, but before we do that, Michael Metzner, one of our other steering committee members in the Electrification Action Team, is going to give us just a short recap of the overview that we did in more detail in our first workshop, and he'll dive into that in just a minute. But I want to let everybody know we are recording this. We'll post it on our YouTube channel. I'll have a link to that YouTube channel in the chat here soon. And just really excited that everybody could be here. Thank you so much for joining us. And again, if you've joined since I made this announcement, please feel free to introduce yourself in the chat. It's not obligatory, but we'd love to get a sense for where people are, what your involvement is in uh, decarbonizing buildings and housing generally, and green finance in particular. And with that, Michael, I will tee up your presentation and you can take it from here.
Sounds good. Well, it's an exciting agenda. Well, first of all, welcome everybody, and thanks for taking the time to continue the discussion on green banks. And as Pete said, I'm just going to spend a few minutes recapping our introduction to green banks presentation from March. As you know, we've had three of these webinars. The one in March was the first one, and not everybody who's on now attended that one. So just want to spend a few minutes recapping that.
And just
So,
confirm you've got the presentation in view there, Michael?
yeah, let's see.
Or is that not the case? Are you just seeing a Zoom screen?
No, I'm seeing it. I think we're good.
Okay.
Yeah, I'm assuming if I can see it, everybody else can. So what are green banks? Green banks are public, quasi-public, or nonprofit financial institutions that use public and private capital to pursue clean energy goals. And among other things, they may offer below market rate loans. They may take risks the market isn't currently accepting, such as the borrower's credit. They may provide support to lenders in underserved markets. And perhaps most importantly, in doing all of the above, green banks improve access to clean energy projects and related economic benefits for low and moderate income communities. Now, to be clear, they are not a giveaway program, expect to be repaid, and may even make a profit. In fact, over 99% of green bank loans have been repaid, which you can look at as a good thing, or you can look at as maybe they're not being aggressive enough, but uh, certainly are being repaid. The main idea is that any subsidies these green banks provide are offset by the health, climate, and economic benefits that they catalyze. Next slide, please. This slide shows several examples of projects supported by green banks. They range from low and moderate income residential energy efficiency and electrification projects, or also known as multifamily buildings, to bike lanes and pedestrian walkways, from mass transit to climate adaptation. Next slide. What are some of the more common techniques used by green banks to help get projects financed? Let's just look at an example of one of these from this slide. There's several. An important one sounds technical, but it's very important: aggregation and warehousing. So inefficiencies of scale represent a significant barrier to private investment in small and geographically dispersed projects like residential or small business energy efficiency projects. However, if a pool of these projects of loans are bundled together to diversify risk and achieve scale, the projects then become far more attractive to lenders. So a green bank can accomplish this by underwriting loans directly and warehousing them until scale is reached. The green bank can later sell the loans to private investors, replacing public dollars with private capital, and go on to their next project. Next slide, please. The first green bank in the US was in 2011, Connecticut, which still is one of the larger ones. Now, I'll say right up front, I've got some old data here, and probably bad on me not to update this, but so it's a year or two old. So it says now there are 23 green banks in 17 states. I think that's closer to 45 and double that number of states at least. So just kind of keeping that in mind, that there were a lot of, at the time these stats were published, there were a lot of folks just contemplating setting up green banks, but a lot of that's been done. So many, and even the remaining states are continue to explore the concept. Existing green banks have invested a total of $2.5 billion, leveraging an additional $6.5 billion of private funds. Again, that was as of a year or two ago. It's probably double that at this point. As I said earlier, over 99% of green bank loans have been repaid. Next slide. Okay, briefly on the Inflation Reduction Act, and I know we'll hear more about this from Lindsay and Franz. The IRA was signed into law in August 16, 2022. Here's a graphic on the slide of how the money flows. The IRA mandated $27 billion for a new greenhouse gas reduction fund to be administered by the EPA. The EPA in turn created three intermediary funds: the National Clean Investment Fund, Clean Communities Investment Accelerator, and Solar for All, which were funded with $14 billion, $6 billion, and $7 billion respectively. Those three funds then ran extensive application processes, resulting in the awarding of $20 billion combined NCIF and CCIA funds to 8 national green banks, which were described in detail at March's webinar. The Solar for All funds will be distributed in the form of direct grants to solar installations and had not yet been awarded at the time this presentation was put together. Go to the next slide. And kind of getting us up to what's been going on lately, the risk to the Greenhouse Gas Reduction Fund under the Trump administration. And you can see, looking quickly at the risks, you've probably seen the headlines, or maybe some of you have. I'll just call out a few of them. Feb 13, 2025, Trump EPA aims to claw back $20 billion in green bank funds. March 17th, 2025, EPA offers no new evidence in battle over $20 billion in climate grants. That was in New York Times. April 2nd, 2025, EPA hunt for shady deals and bars comes up empty. And April 17th, EPA granted appellate stay after judge rules to end greenhouse gas reduction fund freeze. So The judge ruled to end that freeze, but that ruling was stayed by an appellate judge. And that's, I believe, about where we stand now. There may be some more up-to-date information that others have. Next and last slide. These are the key takeaways from March's presentation. Existing green banks play a vital role in meeting our climate goals, but stepping up to fill the financing gap left by private investors. In April of last year, the IRA funded an EPA-administered greenhouse gas reduction fund, created 8 new national green banks, catalyzed with $20 billion, of which $14 billion was set aside for low-income and disadvantaged communities. These mission-driven financial intermediaries will mobilize private capital and deliver clean energy and climate solutions to communities across America. However, as we just talked about on Feb 18, Trump EPA Administrator Lee Zeldin froze the awardees' access to the $20 billion in grants. The situation is fluid now. It's in the courts. It's going to play out in the courts, maybe weeks, maybe months. We'll be watching closely. But I think that's sort of the background, the foundation for a lot of the discussions that we've had since we made this presentation in March. And now I'll turn it back over to Pete.
All right, fantastic. Thank you, Michael. And so in just a moment, we'll start in with first short talk by Lindsay Robbins and then by Franz Hochstrasser. But I want to pause just a second, see if anybody has any questions. We will probably do 10 or 15 minutes for each speaker, and then we'll have the rest of the hour for Q&A after that. So I'd love to keep the majority of the questions for after, but any questions about the intro that Michael just gave us? All right, fantastic. Thanks. And keep questions and comments coming in the chat. That'll be fantastic. And Lindsay and Franz, if you have slides and want to share, let me know. Otherwise, if you're just planning to talk, that's fine too. Lindsay, please.
They did have slides, Pete. It doesn't seem to be letting me. I emailed them to you if it's not possible for me to put them up.
I'll have you co-hosted in 2 seconds.
Okay, great.
Sorry.
Okay, let me know when.
You should be good to go.
Okay, let's see here. All right. Let's see here. Okay, are we in slideshow mode?
Yes.
Good. Okay, great. So, first of all, thank you guys for having me here tonight. And really here to talk a bit about, what CPC's climate capital plans were for what we wanted to achieve with the GGRF, and then really how we're pivoting to try to keep making the kind of impacts that we wanted to have, even without access to those funds. So a little bit of GGRF background. I know we just heard a little bit about this, but as was mentioned, there were 3 types of GGRF funds that were awarded. We were awarded part of the $14 billion in National Clean Investment Funding. We received NCIF funding through our coalition, which is called Climate Capital. CPC, which is our parent organization, they've really been a leader in the sustainable lending space for 17 years. They've blazed a trail for how CDFIs can invest in multifamily housing and make it more sustainable and get the people living in those homes all the benefits that come along with that. And so when GGRF was announced, CPC thought we really need to be part of that. And so CPC came together with 2 other partners, Calvert Impact and Self Help, and we formed a new nonprofit called Climate United. And it's basically a collaboration of a bunch of deeply experienced mission-driven lenders that was specifically designed to be able to ensure that GGRF funding could be successfully deployed and leveraged across every crucial market segment. Climate United was one of three awardees who received the $14 billion that was set aside for NCIF, and we were very honored to receive almost $7 billion to implement our investment and market transformation plan. And $2.4 billion of those funds were intended to serve the multifamily sector. And CPC created a new subsidiary, CPC Climate Capital, which is the organization that I'm part of, to drive the successful execution of Climate United's multifamily strategy. So Climate United was focused on three green sectors, homes and buildings, distributed energy generation, and electric vehicles. And intended to drive impact through, three deployment approach through 7 different market segments and 3 deployment approaches. So a lot of different strategies and tactics. And CPC was specifically focused on the multifamily sector. And a little bit of background on our strategy. So our specific plan for serving the multifamily sector was that we were going to use GGRF funding to deliver high performance buildings, specifically by leveraging the existing network of mortgage lenders. So that includes GSEs like Fannie Mae and Freddie Mac. It includes housing finance agencies, which are state agencies that distribute tax credits and other things that help get affordable housing built. CDFIs, Community Development Financial Institutions, who do a lot of community lending across the United States, and just regular banks. But any lenders really that were part of the mortgage lending network, and to work with them to increase the energy performance of the projects that they were already funding. And we would do that by offering products that provided low-cost subordinate debt that would increase loan proceeds and decrease the overall cost of mortgage capital. And those products would be subordinate to the first mortgage, and were provided at an interest rate that was well below market rate. And these performance standards were intended to ensure that we could achieve the building of very high performance buildings and retrofits that would deliver high performance buildings. And in return for receiving that subordinate low cost capital, projects would be required to meet these performance standards. So as you can see, there's standards for both existing building and new construction. All of these standards were either designed to deliver net zero buildings or buildings that would install significant energy upgrades that would also chart a path to becoming net zero over time. And went too far. And our plan was seeing a lot of success. We opened our intake portal in November of 2024, and within a couple of months, we had a total of 353 projects that reached out to us that represented more than 67,000 units, requesting more than 2.9 billion in capital. This was, we only had 2.4, so it was exciting to see how much demand was out there. We got requests from 38 states, the District of Columbia, the Virgin Islands, and nearly 90% of those requests were from rent-restricted properties. So buildings that were in some way, shape, or form affordable housing. And we were able, before the freeze happened, to close on 2 projects. These were both affordable housing projects that would not otherwise have been able to upgrade their energy performance and make their units more comfortable and make their buildings safer and more affordable for residents without our funds. We helped fund Belmont Dairy, which was a retrofit project in Portland, Oregon, and 62 Main, which was a partially adaptive reuse and also new construction project that happened in Tarrytown, New York. And so, why is it important that we're doing this? Why are we putting all this effort into being able to integrate energy upgrades into multifamily housing? Because energy upgrades make homes more affordable. CPC, my parent organization, They are primarily a lender to affordable housing. They're a community development financial institution. It's their purpose to deliver high quality housing to people who need it the most. And this is one of the ways that we can do that by improving the energy efficiency and lowering operating costs for both owners and residents. Also, energy upgrades make homes healthier. Energy efficient and decarbonized homes, they provide greater comfort, they provide greater control for residents, and they also improve indoor air quality. And also, energy upgrades make homes safer. One of the primary things now, heat is one of the biggest killers with climate change coming. And putting in high performance heat pumps that can help to decarbonize a building can also create more affordable cooling solutions that keep people safe that otherwise wouldn't have been able to keep their homes at a safe temperature in a heat wave. Just wanted to quickly share something. If you are interested in learning more about the intersection of health and building decarbonization and equity, I stole this picture from a report that BEEP and the Natural Resources Defense Council put out last year on healthy climate resilient homes that really goes into all of the intersections between health and decarbonized housing and why that's important. So let's talk about our pivot. So here we are now. The freeze happened, as they said, in mid-February. We have not had access to a penny of funding since then, not even for the request that we had put in for work that happened before February 13th. We are still waiting to hear what's going to happen with the legal process. There is another hearing that is happening on May 19th. We don't know what will happen then. If they rule in our favor, it will probably be appealed. If they don't rule in our favor, we'll appeal. Whatever happens, it's probably going to be several months until we have an understanding of what's going to happen with that legal process. And if that doesn't pan out, then there's a good chance that the case will be sent into the court that decides contract outcomes. And that would be a completely different legal process to move forward until at the end, we would potentially have any access to damages if we're not able to get access to our funds through the legal proceedings that we're going through right now. So it's been incredibly challenging. We've had to shrink our team. We've had to pivot. And a lot of things have changed when it comes to our approach. We don't have access to the funds either for lending or to cover operational expenses. And obviously, the volume at which we can lend, $2.2 billion, was a lot of money. Not enough to transform the market completely, certainly, but it was a lot of money, and there's no way we're going to have access to that much again. Also the rates at which we can lend. GGRF was a grant, and so we could lend at very, very low rates. If we are raising capital on the market, even if it's impact investment or other sources, it's still going to cost a lot more money. And so we'll have to lend it out at a higher cost. But there are a lot of things that have not changed. Certainly the benefits that energy upgrades deliver to multifamily properties and their residents has not changed. The need for energy upgrade financing in the housing sector. You saw the tremendous demand that we saw. People want this money and people want to make these buildings better. And also really the need for simplified and standardized tools and practices that can help to scale adoption of energy upgrades. That was a big part of our strategy for market transformation was we were going to create standardized performance standards and lending tools and underwriting standards and technical assistance qualifications that we could use and refine as part of administering the grant, but also that could be used more broadly across the whole multifamily lending sector that would make it easier for other groups to do this lending as well. And also what hasn't changed is our ability to increase borrower and lender exposure to and experience with integrating this into their financing events. That's another big part of the market transformation that we can create is by just getting people more comfortable doing this, more familiar with how to go about doing this, both from a lender and a borrower perspective. So this is our pivot, and we really just got to this point, a couple of weeks ago where we decided that this was really important, the work that we were doing, and we needed to find a way to move forward that did not require GGRF funding. We will continue to be involved in the legal fight for our funds. We hope to get access to those funds sooner rather than later. We remain confident that we'll get access to at least part of it at some point, but we don't know when that will be. And this is an urgent thing, and we need to keep doing this lending. So we have pivoted with now a smaller team, and we're going to be focused on raising $250 million that can help us continue to lend into these projects and help projects take that extra step to integrate energy upgrades. And we're also working to secure philanthropic investment that will help us continue to develop those tools and standards that are going to be so important to driving market transformation. And we'll also support the ongoing lending that we hope to be able to keep doing. And this is just kind of an overview of what we're hoping to do from a market transformation perspective with the pivot. We already built performance standards and standardized templates and methodologies. We figured out processes for qualifying technical assistance providers at the project level. We were in the middle of beginning to build a data platform where we would collect energy and financial performance data on all of these projects that could help lenders underwrite and have the data and access they need to do that. So we'd already begun to build a lot of things. What we're hoping to do is get access to the philanthropic funds we need to keep doing that and to partner with others across the multifamily sector and be able to keep refining those tools and doing education and outreach to key stakeholders in the sector and just to keep collaborating so that we can come up with tools that are going to work for the multifamily sector. And that is all that I had. I stop sharing? Sorry, I don't usually. There we go. I don't usually use Zoom. My apologies.
Wow, thank you. So much that you covered there, and really appreciate you telling us about it, and really appreciate CPC being committed to moving forward. That's really exciting. And I guess let's jump straight into Franz's presentation. If anybody has a sort of urgent question, go ahead and raise your hand. Otherwise, Franz, I've already made you a co-host, and you can go ahead and start sharing your screen or just talk.
All right, wonderful. Well, hello, everyone. I'm Franz Hochstrasser, Managing Director of Finance with S2 Strategies. Before being in this position, I built a company called Raise Green that was a climate investment platform, the largest by number of participants in the country for retail accredited and non-accredited investors to put as little as $100 into clean energy projects or green bonds. Some of you may have used it, hopefully. That company was acquired about a year ago, and I left to do consulting work on the Greenhouse Gas Reduction Fund and the federal tax credits. Before that, I worked for President Obama for 9 years of my life, all on clean energy and climate solutions. So I don't think of myself as a DC insider, but I do think of myself as a recovering politico sometimes, although the recovering part gets harder by the day. So for anyone who has seen today's announcements or news, I just want to share some updates from DC, which is where I'm based, and just let you know that with the House bills coming forward today for the reconciliation package, now is truly the most critical time to educate policymakers about the significant adverse effects and impacts of the proposed legislation on rising energy costs for families, cuts to economic growth, and investment in communities that was on pace to be upwards of 500+ billion across the country, spurred by the Inflation Reduction Act and the Infrastructure Investment and Jobs Act, which of course also gave us the green banks, or rather the Greenhouse Gas Reduction Fund. All of that is very much so under threat with the most recent House legislation, as well as the freezes that Lindsay discussed. So, if you'd ever thought before about contacting your member of Congress or working with others to do that, I urge you to do so in the next 24, 48 hours and really over the next month plus. as this tax bill unfolds. So if you're interested in that, please feel free to let me know. I know you all are active in your communities and in CCL, so thank you for what you're already doing, but now is the time to kick it into overdrive. Okay, that's my quick pitch, and then let me dive into the importance and history and sort of backgrounds of green banks, but more so because your colleague already described it, and Lindsay did an excellent job of describing Climate United's award. I want to sort of look forward in this moment and share some views on what can still be done, even despite a lot of the federal rollbacks and aggressive attacks on clean energy and climate finance. So I am going to actually, maybe I will put a deck up here um, just to keep your eyes from glazing over. Here, I'll put my screen on if you can see that. Apologies for all the madness, but here we go. Okay, so one of my largest clients, as Pete very kindly mentioned, is the Green Bank 50, which is a member-founded, member-driven organization to support green banks across the country. And their mission really is to continue the growth of the ecosystem that Lindsay so artfully articulated, that the Greenhouse Gas Reduction Fund sort of was meant to be the major infusion of cash for, but that also existed before the GGRF and will continue to exist in some form and fashion thereafter. So to give you a sense of how big it has been, the IRA was passed, the Inflation Reduction Act was passed in 2022. But at that point, the green bank ecosystem was already mobilizing about $5 billion a year, and in 2023 did about $10 billion in 2023 alone in the lead up to 2024 when those awards were made. So yes, we were going to have a giant infusion, and we in fact do still have a giant infusion of $7 billion through the Solar for All program, which went to 60 recipients. And even though the NCIF program, the National Clean Investment Fund, which Climate United is the largest recipient of, and the Clean Communities Investment Accelerator program amount to 20 billion out of the 27 billion total, there is still great momentum in this community. And even if we don't ever see another dollar from the GGRF, which, God willing, we will, or rather, I suppose the Circuit Court and Supreme Court willing, we will. The ecosystem that this moment in time has spawned will continue to exist, and it will be available and useful to not just you all as your community leaders, but to low income and disadvantaged folks who have not had access historically to clean energy finance, and to communities all across the country. So the Green Bank 50 has over 50 members now in nearly every state across the US. And that's just the green banks. There are also community development finance institutions that are entering or have already been in the clean lending space. And then there are credit unions from the inclusive group as well that do green lending. And what I want to convey to you, is that this structure that was codified and is still in law in the Greenhouse Gas Reduction Fund has catalyzed a tremendous amount of activity around and innovation, frankly, around clean energy lending and climate lending in a way that even if, again, we don't see that $20 billion again, and as I understand, about 3 to 5 billion of it has already been sort of moved out of the Citibank accounts by various members of that coalition or of those recipients. This work will continue. So this is stuff that I think Michael already went over. These are the recipients, but I think the question is, what exists after this moment, if in the post GGRF world? And so that's what I want to try to answer with you all today, and not spend too much time talking so I can get all of your good questions. But this threat is real. It has been, it is illegal what the EPA has done, and what the Treasury Department has done to freeze funds. And we are confident that the merits in court and to be heard on May 19th will prevail. However, what the ecosystem looks like thereafter is the following. So you still have 60 awardees of the Solar for All program all across the country, many different types, nonprofit, multi-state, nonprofits, municipal, state, and tribal. And when this program was announced by President Biden on Earth Day in 2024, the estimate was that 900,000 low-income households will benefit from these projects. So we need help from you all to raise awareness about the availability of these funds as they start to and continue to flow. And that's a lot of work to do. As you can see, it's, that there are hundreds and hundreds of millions of dollars coming into states all over the country. And you can be very helpful in helping, residential folks who are low income or disadvantaged, or as well as at the community solar scale, access this money. So that's one thing that we still have. Another is this Green Bank 50 network. So as I mentioned, there's over 50 organizations. I'm going to drop a link before we're done here in the chat of a really useful reference guide that has every one of the websites for every one of the green banks, as well as every one of the CDFIs that does green lending available. That's publicly available to you, and that you in your community should get to know your green bank, get to know the CDFIs doing clean energy lending in your community. And then lastly, which I think is probably the most important, is, clean energy project finance and climate finance has existed before the GGRF. It will exist after. We will figure out how to do these deals. And the fundamentals of this, we call it the solar coaster sometimes in the business, because of the fluctuations in policy. And don't lament the loss. We should lament the loss of and the threat that we're under, and we should push back hard as hell. But at the same time, let's innovate into this future together. And put together the capital stacks of commercial projects, help residential folks get new access to financing, and continue to just get deals done. Because even if the House markup of, the tax credits comes into effect, we still have until the end of this year with all the existing law in place, and a phase out after that. But as I said, we will keep doing this work, and you all are critical players in that process. So let me maybe stop there. Actually, one last thing is to say, the point of the Greenhouse Gas Reduction Fund and green banks is to, I think, connect communities with the capital markets. And I sort of live in this financing space, trying to do that perpetually, and matching capital sources to the stage of risk is the game of getting projects funded and built. And so, yes, that will be harder without $20 billion of grant capital, but we're still going to figure it out. And we have to live at this nexus and along this spectrum to continue to move the commercialized technologies like solar and wind and now battery storage along this continuum, as well as the more innovative, climate resilient projects and low carbon technologies and transportation, et cetera. So we can do this. We're all in this together, and I appreciate the opportunity to spend some time with you all.
Wow. Fantastic. Thank you both very much, Lindsay and Franz. And Franz, I include a technology adoption S curve in many of my discussions about the energy transition. Um, but it's not as sophisticated as what you just showed us. That was amazing. And I look forward to talking about it more. Anyway, I will shut up and just invite folks from the audience. Skip, go ahead.
Thanks, Pete, and thanks, Franz. That was an excellent presentation. I look forward to actually looking at that in greater depth. Do you work with a group called 10 Power, which out here in Washington helps the tribal nations find funding for clean energy? Have you heard of them, and do you work with
Skip, thank you
It's called
for that question. We do work actually as part of a coalition called SETCAP, which I believe is Clean Energy Tax Advisory Partners or something with the state of Washington to implement a technical assistance program for those tax exempt entities that want to utilize elective pay or direct pay, which is a groundbreaking policy.
Did you say?
So, so I believe that they are part of that or have participated in some of those roundtables, but I don't know for sure. So, I believe so.
Okay, well, I'll contact. We're going to be trying to work with 10 Power for getting the tribal nations and there's an alliance for tribal nations on clean energy to try and get them engaged in funding and green projects. So I'll undoubtedly utilize some of the information from your presentation. So thank you. That's it for me.
All right. I see Wayne's hand up, and other folks go ahead and queue up.
Yeah, I'm just wondering, I'm in Ventura, and there are some parts of the community that are LIDAC, and how would one go about putting together, say a project of, retrofitting multi-unit housing with green, with a green bank? How would one approach that?
Well, I think, what we were trying to do and what I think we're still probably going to keep trying to do with the additional capital we raised was really trying to make sure that properties that are already going through some sort of financing process, so maybe they're refinancing their mortgage, a new owner is acquiring a building, or a building is being built, that at that time we can insert additional capital into that deal that help them do whatever retrofits or other changes they already need to make, plus install energy efficiency upgrades and decarbonization measures that are going to make the building better. So, I think that it is one of the ideal times for a property to do it. It's very hard for properties to get access to the capital they need. Kind of, we call it mid-cycle, in between the normal financing cycles that they're going through. So, certainly if there are properties in the neighborhood that already need to refinance, that are changing hands, that's a really good opportunity to try and take advantage of that moment and get access to the funding that they need in order to make, there's probably lots of deferred maintenance and other things that need to be addressed as well, and to address those and be able to install energy upgrades at the same time.
Yeah, so are you familiar with the Berkeley Energy Savings Ordinance? Which,
Yes.
oh, okay. So does that have relevance here?
I mean, I'm not familiar in detail with
Neither am
Berkeley
I,
Energy
but
Savings. I mean, basically, but that's gonna, if you're requiring people to make energy upgrades, that certainly creates more demand, and people have to get creative to figure out how to do it. And, it makes people willing to maybe jump through a few more hoops to be able to get access to the funds that they need to do that work.
yeah, are there any incentives for loan agencies to give consideration for people that have made, energy upgrades on their properties? Because then their utility bills won't be as high, so is there
That's
something?
one of the things that we're trying to do with broader market transformation and starting to collect data on projects across the country that have installed energy upgrades is to, I mean, right now when people do underwriting to loans, they base it on data that is out in the market to say, oh, well, they'll be able to charge this rent or they'll be able to yada yada. There isn't really robust data set for multifamily buildings yet on how buildings perform and how you can underwrite to savings that might accrue or what their performance might be. And so that's one of the things that we were hoping to build with the GGRF funding and are hoping to still find a way to build because we know how crucial that is to actually making that broader market transformation and making that possible.
All right, thank you.
Welcome.
Mark, go ahead.
Yeah, Lindsay, you may have covered this in your presentation, but can you talk a little bit about the mix of the kinds of projects that you saw demand for, what the nature was? Because that's a huge amount of interest.
It is, and we were incredibly excited to see it. I mean, like I said, it was for multifamily projects. There are 38 states, DC, one territory, so across the board. It was a really broad variety of projects. I would say probably more new construction projects than we had ultimately planned on funding. So that was an interesting thing to see. Our goal with GGRF had been I think 25% new construction and 75% existing buildings. And we certainly saw greater demand from the new construction side. Not to say that there wouldn't have been adequate demand on the existing building side, but I mean, everything ranging from new luxury building developments to very small mom and pop owned buildings that were in low income communities, very, very affordable housing all the way to the other side. We had projects in tribal communities. We didn't have tons in tribal communities or rural communities, which were places that we really wanted to reach, but we were starting to develop relationships to be able to build that part of the pipeline as well. But it was a very diverse array of projects, and we were incredibly excited by that.
Was it mostly electrification or energy efficiency or
So based on our performance standards, we did have one option for existing buildings where they could do energy efficiency, and as long as they did not install any new fossil fuel equipment, they could participate in the program, but they'd also have to develop what we call a zero over time plan to prove that they had a game plan to actually decarbonize the building over time and could show how they'd invest at different points when equipment failed, et cetera, to make that happen. But all of the other performance standards that people could meet require eliminating carbon emissions on site. So decarbonizing, and then the higher levels require maximizing on-site solar as well.
Okay, great. Thank you.
Question, I guess start with Franz on this one. How are you seeing private sector investors and also, I guess, other public sector investors, state, local, how willing are they to sort of step up and try to fill this gap of capital that is, caused by the freeze? I mean, it's, we're saying we have to do that and we want to do that, but are we seeing evidence of it?
Yeah, I think it depends on which type of investor. If you're looking at like full on market rate, private equity and publicly traded companies, the market goes where it's most economical, and right now it is absolutely still most economical to build cheaper, faster, better, clean energy than it is to build new fossil plants. That's why across the world more than 90% of all new energy was clean energy, and in the US it was over 80%. So I think those folks that invest private dollars like are going to take you up on a good deal wherever they can get it. I think what is also happening is that developers who are looking at the tea leaves of the Trump administration and the hostility toward clean energy, some of them are, unfortunately canceling their projects. And we've seen that happen with new manufacturing that was planned. And it's killing jobs in places like Georgia and in Ohio. And that's highly unfortunate, but I think that's also the intention of having an aggressive, uh, pro fossil fuel agenda of the Trump folks. But yeah, I mean, and then we've also seen philanthropy, get more active, I would say, as these threats kind of continue to unfold. Now, of course, a lot of civil society is feeling the pressure because of the sort of insane onslaught of shock and awe that this administration has come in with to sort of dismantle the administrative state, and as a result, a lot of philanthropies are reeling a bit, but they are definitely increasing their commitment and doubling down on climate where they're already committed to it. So one example is the MacArthur Foundation is, they're mandated to fund 5% of their endowment every year, and they bumped it up to 6%, which, that's a $30 billion endowment. So you can do the math there that there's a lot more funding coming out of that particular foundation.
Thanks.
All right, Gene, if I may, I'm going to ask Bruce to go first. He had his physical hand up and was fighting to find his Zoom hand. So, Bruce, go ahead, and then Gene.
Yeah, I have two comments. The first is you guys mentioned specifically you want us to talk to our Congress people. Good idea. Hopefully you have a document or something that we can use to leverage on. Generally, when I'm working with trying to influence the legislature, there's usually a group of people who have come up with letters, et cetera. If you have something like that, you'll facilitate the ability to do that. I know where to send them, but I don't know what to send them in specific, that highlights where you think the most important is. The second thing is, we mentioned specifically about the fact that new construction is booming in regards to that. It's a lot less expensive, as has been raised, that it does not surprise me whatsoever. And you need to figure out how to leverage that in forward, because of the fact that it is where, you do pencil the numbers out. It's a lot easier to do that rather than having to rip up gas lines to put in electric lines, et cetera. Thanks.
Yeah, thanks, Bruce. And this whole shared interest between S2 Strategies and GB50 and CCL really just came to our attention last week as we were pulling the final pieces of this together. So we've already introduced Franz to CCL's government affairs team and going to try to nurture, if it makes sense, any kind of messaging that we can include in the next few days. And as Franz said, 24 to 48 hours. We don't have that yet. Franz, anything you'd like to add to that?
Sure. Here's a quick document that we have circulating, just with some points in case you do want to pick up the phone and make some calls or posts on social or whatever it is. So feel free to use those at your discretion. I'm happy to put a few more in the chat as well.
Yeah, fantastic. Thank you. All right, Gene, please go ahead.
Thank you. I think this is going to follow kind of right along the recent discussion, but I've called my members of Congress on my own, and then when a organization that I belong to sent out a group letter, I signed the group letter, and I'm going, how many times can I contact them? What's realistic in terms of the one person making different contacts, and maybe how I can improve my presentation of that. I think this document will be a great way for me to, check and refine what I would say in those brief messages. Thank you.
Yeah, fantastic. I I don't have the perfect answer for the, how often and how much do we have to change it. But I think probably the short answer is it can't hurt to contact them again unless you become a real pain in their neck. So, and it sounds like my impression is you're not that.
Well, try to keep it short, to the point, and
Yeah.
respectful.
Yeah. Well, we are close to the top of the hour, and probably time for a couple of more questions. But also, I want to take a quick pause and see if either Franz or Lindsay have any sort of final thoughts that bubbled up as we listen to Q&A here, or any of the other steering committee members. I know Jay, you posted a couple of things in the chat. Thank you. Franz, Lindsay, anything? Nobody's coming off mute. Franz is fighting his computer to come off mute.
Yeah. Yeah, I'm always fighting my computer. Yeah, I just want to thank you all for, your leadership and your willingness to step up and fight on this issue. And the as I said, a lot of folks have been in this space for a long time and will continue to be. And those of us who, you know, uh, fight these battles every day have to stick together. And there's a lot at stake, and it's easy to get distracted as well by the many threats to our, freedoms and rights. And this issue, I think, is a worthy one to fight back on and to stay focused on. So appreciate your work.
Yeah, I
Awesome.
second that and just appreciate all of you and all the work you do. I'm a building decarbonization geek, and I love to see people doing stuff to keep that moving forward. So really appreciate it.
Well, and likewise, and I think thanks to your organizations, which I guess in a nutshell, you kind of clearly exemplify both patient capital and mission-driven capital, and that's a breath of fresh air in today's environment. So thanks to your leadership as well.
Okay, and I'll just add the same thing as we got to know you. Really, really love this whole the optimism about, we're gonna fight like hell, but even if we don't win, we're gonna do everything we can to make up for it and fill the gap. So it's a great approach. Thank you for that.
Well, we are going to win.
Yeah.
I mean, the economics are there. We're going to win.
Keep in mind
the
that
economics.
there's always multiple ways to get there, whether you call it affordable housing, community resiliency, whatever ways we can get the investments done and get people to buy off locally and move it on up and form that bulwark we're talked about. Better off we'll be.
All right, fantastic. Well, I'll go ahead and stop the recording.